Oh, the government. The government has their hands in this real estate market, and we are just puppets. They have us on their strings, raising interest rates, wanting to slow down the economy, wanting to slow down the housing market. But, ladies and gentlemen, I got your back. So on today's video, I'm gonna break down how fast is the Arizona market shifting. That is right. How fast is this Arizona real estate market, the housing market in Phoenix, Arizona, shifting to a buyer's market or to a bubble that's gonna pop? So with that being said, let's deep dive right into this data. And if you like energy, and if you like the truth, and if you like the facts, I suggest you stick around because this is gonna be a fantastic video. And don't let the government scare you. They're trying to scare you. Folks, before I get into the data, do us a favor to push this video out, just like you who are looking at this video. Smash that subscribe button and that bell to get notified once we drop the latest video. We're just bringing some home buyer tips, home seller tips, investing tips. If you're thinking about buying, selling, or investing in some real estate here in Phoenix, Arizona. If you're moving or relocating, we got your back here on this channel. Now let's get into this data and show you how fast this Arizona market is shifting or how slow it's shifting, because it could be a rabbit race, it could be a turtle race, but the federal government is playing us like puppets, raising these rates. And is it working? All right, ladies and gentlemen, so the first thing I want to get into is active listings for sale. Now, I went back last year to compare with this year, okay, and then to compare with today. Now, I bring a lot of energy in this video, and I might not be the right real estate agent or mentor or advisor for you, because that's just who I am. I love life. I love helping you out. I love giving you the value, but I gotta do it my way, because then it doesn't come across as being real and authentic. So this is just me. When you meet me, I am the same way. Probably not as loud because you guys are gonna get scared meeting me, but once we get on that good relationship, you know, it's gonna be interactive. It's gonna be high energy. I'm gonna mentor you, telling you the truth, the facts, and then I just have to be like, hey, here's all the nuggets. Now you gotta decide, my friend. You gotta decide whether you wanna buy, sell, or invest in some real estate. So, active listings, okay? I got some notes here, okay? In 2021, June, we had 4,912. That was last year in June, okay? June 4th of this year, okay? June 4th of this year. That is just like yesterday, right? Because today is the 5th. So yeah, yesterday, 7,842. What's going on? What's going on? There's a lot of homes on the market. Is the market gonna crash? Is there a bubble? Calm down, okay? Let's all just, let's calm down, okay? Let's calm down. But today, there is an increase. 9,433 listings for sale. So we have a rise in homes for sale. It's a little rise, right? It's going up. And we like that. We have more inventory for home buyers to buy something now. But the federal government, like I said in the beginning, we are the puppets. The reason why, 100% here in Arizona, the reason why we have more active listings for sale is because people are priced out of the market, folks. The average home buyer here needs to make a certain amount of income to buy a house. And when you increase those rates, those payments go up high, and you have high prices while you're pricing people out of the market. And the government is just trying to slow down the economy because of inflation, right? Home prices are rising, so they're raising the rates. And a lot of home buyers are just like, man, I can't afford anything. So is the bubble gonna burst here in Arizona? Well, let's go look at some charts here, because I can tell you what I think is gonna happen, but I like to back it up with real data. Real data. And just give it to you and be like, here are the facts. Do you see the facts? Yes, that's my phone going off on a Sunday because people still text, and I'm a full-time agent, and I got some transaction going on, and I'm pretty sure that's something, somebody needs something from tomorrow, or a new house came on the market, and my buyer's like, Victor, let's go see this house today, man. But anyways, let's get into the data. All right, ladies and gentlemen, so the first chart I want to get into is the federal interest rates for mortgage-backed securities. When you go get a mortgage, this is what your rate's going to be. I'm going to take it back 10 years, y'all. 10 years. So you can see that, man, we have been programmed, okay, sincerely programmed, that rates are high. But they're actually at normal rates, close to normal rates. I think they should be a little bit higher, 6%, 6.5%. But we have been programmed that, man, rates should be at all-time lows, like 2% to 3.5%. But folks, I'm going to show you a chart here to show you what interest rates are doing, and if you should wait on the sidelines if you think the interest rates are going to go down. What's the time frame you might be waiting? And I'll discuss this with the chart. So let's go check out this chart right now on interest rates. Okay, ladies and gentlemen, so as you can see in this chart, I'm gonna be looking at the screen so I can explain something to you about these interest rates. Okay, so you can see back here it is. September 19th of 2013, we were at 4.5% on a 30-year mortgage. Now look at this chart, okay? We went all the way down to 2014 and they started coming down. But look at this chart. In 2017, they went back up to 4.32%. The lowest was right here in 2016 at 3.42%. They went up to 4.32%, but the high point right here is 4.5 in 2013. The low point, boom, right there, 2016. So you had to wait 3 years for that interest rate to go down. Now, look at the high point again, folks. 2018, we were at 4.94% on an interest rate, 30-year mortgage term to buy a house. Okay, 2018. Now let's take a look. It went all the way down, folks, all the way down. Okay, right there, 2.73%. Right there, 2021. So from 2018 to 2021, that's 3 years, folks. Just call it 3 years. It took for the interest rates to go down. Now, we are here, 2022, okay? So 1 year is taking us to go up. So the question I have for you is, are you going to sit on the sidelines for 3 to 4 years for rates to go down so you can go and attack and buy a house? Will you wait 3 to 4 years till rates to come down? We don't know if it's going to come down again. We had the Fed meeting again. They have 2 more meetings. They're probably going to raise rates. I don't know. I think they might not raise rates. They might see how this goes as far as inflation and kind of like wait another till the next meeting. I don't know. I don't have my degree in politics and economics and everything, but if it was me, I would wait it out. But the federal government we have us like puppets. Okay, they're in the housing market. They're trying to slow the economy down. They're trying to make sure prices don't rise as fast as they've done in the past. But my question is to you is like, how long are you gonna wait to get into the market? The longer you wait, what if these prices get out of control? They're gonna continue rising here, especially here in Arizona. Does rates really gonna matter for a long-term purchase? I think you have to reset and be like, I'm buying my house to live in. It's not an investment, especially if you're buying your first house. Now, as an investor like me, I'm like, you know what? I'm not gonna buy anything right now because my rate's gonna be 6%. How am I gonna cash flow this property? I might have to do an Airbnb. That's gonna take a lot of work, right? People coming in and out. Now, Glendale, Arizona has put some sanctions that short-term rentals, they're making some rules about short-term rentals when the Super Bowl's coming to Arizona. As an investor, I am like, I gotta unload my property now, right? Unless I have a real low rate like we do on our investment properties. But put your thinking cap on. Are you buying the house to live in? Yes, buy a house. If you're going to invest in real estate as a rental property, Make sure you're gonna cash flow, you're gonna break even, you have somebody who's gonna live in there as a family member, coming to ASU or something like that. But you really gotta think about it, and you really gotta run the numbers, know the facts and the market, because real estate is local. You can't compare Arizona to Florida. You can't compare Arizona to California. You can't compare Arizona to Idaho. You can't compare Arizona to Texas. We are a growing state where companies are coming in, people are moving in, and the rates, they do make you decide what you want to do. But if you're buying for long term, buy. If you're buying for short term, I wish you nothing but luck, my friends. Well, ladies and gentlemen, the next chart I want to show you is brought to you by the Crawford Report. Now, I pay some money for this. Okay, I pay money to get the data, to get me educated on what's going on with the market, because I do have investment properties. I want to make sure I'm giving you the truth and the facts to you, my clients. You're going to call me from YouTube. So we're going to get into the active listings for sale here. Okay, now, these are all properties. We're going to do, let me just do single family. Hold on. Let me just do single family. We don't want no condos and mobile homes and nothing like that. Okay, single family homes. 2021 to 2022. Now we are at June 4th. There we go, June 5th, week 23. Last year we only had 3,815 homes for sale. Right now we have 7,842, sorry. And today I just checked, we have 9,433. In order to get to a balanced market, my friends, we have to have 30,000 listings for sale. Okay, so we're about 20,200 homes still to get to up to 30,000 listings to have a balanced market. A balanced market meaning that no buyer or seller has the leverage between one another. This means that when we go to a balanced market, give me a second, let me change my screen here. Okay, when we go to a balanced market, we are gonna have negotiations. Closing costs. Will the seller pay for the closing costs? Will they pay for the home warranty? I'm allowed to do the home inspection. Can I get some appliances, please? Can I get some repairs, please? So we're trending into this market, but we still have a long ways to go, folks. We need 20,200 homes for sale on top of the 7,842 we have now. Okay, to get to a normal market, we need 30,000 listings. Now, a reason why I point this out is because I have a listing in Tempe, Arizona, right by ASU. It is prime location, prime location. My seller, we have to buy another house because they've been watching my videos. They're a past referral. They reached out and said, hey, do you think we've hit the top of the price point? And I said, yes, it's going to go up a little bit higher, but very, very slow. Now that rates have increased, a lot of buyers are they can't afford it. So if you're looking to cash out, now's the time. If you're a seller on the fence, now's the time. Okay, yes, you're buying at a higher interest rate, but I just showed you the chart. We're at probably almost close to normal at interest rates. Now, here's the deal. I have this property for sale. And I prepped my seller. I said, hey, we're not going to get 20 offers. You're not going to get probably over asking price. So we have to list it competitive to the market because the market has shifted and it's changed. Took us a week and a half to get under contract, but we still got it under contract at list price. Boom. 3-bedroom, 2-bath, 1,280 square feet. Perfect for an investor. Perfect for a college student. That's exactly who we're selling it to. But we didn't sell it in 3 days. We didn't get 20 offers. We didn't get any kind of bidding war up. Property's immaculate. All you have to do is move in. Everything's brand new. We got list price. We're not paying closing costs. We're not paying for home warranty. It's still a competitive market, just on a different location, just depending on the location. But I want you to understand this. If you're buying a property, be careful who you work with, because you don't have to be doing this bidding war anymore, depending on the location. If you are a seller, pay attention here. You're not going to get 15, 20 offers. We only got one. And you're going to have to be patient, my friends. Patience. So, that is the active listings for sale. I'm telling you nothing but the truth because I had the listing in Tempe. We just sold a listing in Tolleson. And we're not getting those multiple offers and those bidding wars. So the next question I've been getting is like, yeah, Victor, but what about all these foreclosures that are coming to the market? And I'm like, yeah, we have some coming to the market. And you got a point. You got a valid point. Very valid point about foreclosures coming to the market. And here they are. There are so many foreclosures. Give me a second. In May, we had, June, we had 8. 8 notices of properties going to foreclosure. Now, remember back in the market crash? 10,558, folks. Look at that chart. These are notice of trustees sales by month, meaning that the homeowner is getting notice like, hey, you're going into foreclosure. You either need to make up your payments, right? Or you're going to be foreclosed upon, and this is where we can go buy properties at auction. Look at this chart. 2009, we had 10,558. This chart has significantly gone down, and look at this. We have no foreclosures in Arizona. The highest is 427 in March. Right? There we go. May, 281, folks. 281 foreclosures in May. Okay? Now, being an investor, I'm not going down there and bidding on these properties. Okay? I am not. It's just not worth my time right now. It's not worth my time. We got to get this foreclosure data up a little bit more for me to go spend some money down there, because you got to buy it all cash within 24 to 48 hours. I'm not going to spend my time over there bidding on some properties that I'm probably not going to want right now. Now, do I see this number going up? I think so. A lot of investors are pulling back, and they're like, hey, I'm going to wait because this federal government got their hands in the pocket like strings, like we're puppets. So as an investor, as my hat on, I'm like, if I buy a property and I have to rehab it and put this money into it, and then I have to go get a cash out refinance to get my money out and put it on the market for rent, my cash flow is probably going to be negative. So if you're thinking that we have this huge foreclosures coming in, it's not happening, folks. Not in Arizona. And I'm putting my things out there. I hope I'm wrong. I hope I'm not wrong, but I just don't see it happening. Well, ladies and gentlemen, also another chart I want to show you. It's a great indicator for me is seeing months of supply. Like how many months of supply do we have? Because we have demand and we have supply. And right now, we've been having so much demand here in Arizona, people moving in, wanting to come to Arizona and buy a house because it's affordable other than other states, okay? But we're seeing months of supply rise as well, but it still hasn't reached its potential on a balanced market. Now, remember I told you is we need 30,000 listings to be a balanced market. For months of supply, we need to have at least 6 months. So right now, let's go show you this chart so you can see what I'm talking about. Okay, ladies and gentlemen, so here's the chart on months of supply that I wanted to show you. And you can see right now, as of June 4, 2022, we only have 1.1 months of supply. Now, what does that mean? Well, in order to be in a balanced market, we need to get up to 6 months of supply. And I just don't see that happening in 2022 or 2023. I could be wrong, but I just don't see all these homes coming on the market and creating a balanced market close to 2014 where we had 5.2 months. We have been in a steady decline since 2011. And the reason why I say that is, do you remember the crash of 2008? When all the home builders they stopped buying land. They stopped building because they got hurt. A lot of people got hurt just like you and me in 2008 when the market crashed. So we have stopped building in the United States for over 10 years. Now let me explain a little bit more what's going on here in Arizona. Now, a lot of builders stopped building in 2008 here because we got hit hard here in Arizona in the crash, okay? It was Arizona, it was California, it was Florida. We were the top 3 states. If you look back at the headlines, go back on YouTube, you can Google search this. We were the top 3, okay? Sometimes we were number 1, sometimes we were number 2, sometimes we were number 3. The housing market here in Arizona just got hit hard. Everybody stopped building across the United States. Then after the recession in 2008, right, builders started building, but they were buying not that many lots, not that much acres, okay? And population just kept on growing here in Arizona. People kept on relocating here. We have so much demand and not so much supply. And now with the pandemic and with China and all that stuff going on, Russia and Ukraine, we just don't have the materials to build fast enough here in Arizona. So this is why I'm putting my cojones out there for people to know what cojones are. You know what I'm talking about? Is I don't see a bubble happening. And I've been saying that for quite some time. If you look back at my channel during the pandemic, it just wasn't going to happen, okay? So months supply 1.1 months. We got to be at 6 to be a normal inventory. We need 30,000 listings. Right now we are at 9,433 listings. Where are we going to get 20,000 more listings? I don't know, but if you do find out, please let me know. So ladies and gentlemen, overall, this is why my reasoning is, just with the data and the facts that I'm presenting to you, is there's no bubble in Arizona. We have people who have bought homes on 30-year fixed rates, great credit scores, no ARM loans, okay, no funny income loans. It's all, the data is there. And I want to show you a 2008 versus a 2022 data on why it happened in 2008 and why it's not going to happen in the future. I could be wrong, right? Something could happen in the world, in the economy, but I'm talking about housing as a general. Okay, people who've bought homes, okay? I'm talking about people who've actually went and got loans and bought homes, that the housing market is not going to crash. But yes, the overall economy can make something collapse. That's, like I said in my previous videos, way in the past, I knew that the government was going to do something to try to slow down the economy or make something happen. And they can make this thing pop. But I'm concentrating as the local market as a whole right now that I don't see it popping. But yes, it can happen if something else happens in the economy, right? I just want to put that out there, okay? But I'm just talking about real estate as a whole in Phoenix, Arizona, okay? So let's go look at this other chart for you so I can give you the data and you can compare, make your own decision. Okay, ladies and gentlemen, so here's a little chart or table, you can say, from the Cronford Report. They do an amazing job as well. Let me kind of zoom out of here. Made myself into a little small head in the middle right there so you guys can see what's going on. So I'll be looking at the chart with you guys over here, okay? So 2005 to 2008 bubble. We had 100% financing, folks. Okay, no equity from the start, high foreclosure risk. 2022, we had significant down payment in cash, high equity from the start. People are putting down the 3.5, the 5, the 10, the 20%, even more, and we don't have a foreclosure risk. Okay, remember the short-term loans and interest-only payments? Well, there was low payment to no monthly payment, no payment at all to principal reduction, a large balloon payment at the end with those ARM loans. Okay, 2022, nothing but 30-year fixed interest rates. Okay, principal reduction built into the payment, low foreclosure risk. Remember the adjustable rates right here, folks. Remember those adjustable rates, payments adjust with interest rates, high foreclosure risk. Well, we have fixed rates. You already know what that means. Unstable buyers back in the day. I remember this clearly. People were in line to buy a new construction just to buy it after it's built to resell it. People were coming in from Canada, from New York City, from California because they saw the market and they just got wiped out. When the market corrected, they got wiped out. They couldn't sell it to anybody. Okay? They're high foreclosure risk. Okay? Now, right here, stable buyers, right? Stellar credit, high income, low foreclosure rate. I'm telling you, all the clients that I've helped, great people, great income, been at their jobs for a long time, I'm talking about 10 plus years, 20 plus years, great credit score, cash in the bank for down payment. Other one, no intent to occupy or no rent, right? These are the people who are coming in and buying just a new construction to try to flip it up and sell it. And yeah, to crash happen, right? Okay, now we have people who are actually buying their house. They're living in it. They're gonna live in it for 3, 5, 7 years until they outgrow the space and wanna buy again. But now the interest rates are higher. People are not putting their houses on the market right now, okay? Especially if you have a 2.1%, you're probably going to be like, man, why do I want to go buy another house? Unless you really need it, not want. Need another house? Yes, sell and buy. Want another house and you could kind of stay in your house for a little bit more time? I would just wait it out. Just wait it out. And then in 2005 to 2008, new home development outpacing population growth for 10 years. We had growing labor force in construction, high vacancy rate. Now, 2022, new home development struggling to keep up with the population growth for 10 years. I just said that, and I didn't even see this down here in the bottom of this slide, the first time I've seen it. Labor shortages and supply chain disruptions dominate builder issues, low vacancy risk. I'm telling you folks, we have a labor shortage issue here in Arizona and across the US. Contractors from cement to labor to drywall, paint is good, to roofing. All these materials are causing a struggle to build houses to keep up with demand. So that is one of my 2 cents here why the Arizona market's not gonna crash. Like I said, the real estate. Then you have the economy, the federal government with their little puppet hands, the strings, they could do something, right? They could do something. So I just wanted to bring you the data, folks. I think it's very important that I bring you the local data here in Arizona, just to give it to you real, raw, and relevant, to show you all the reasons why that there is a housing market shift in Arizona. Don't be scared. It's not gonna crash. Okay, I'm putting it out there. But you gotta make a decision. You're buying for long term. You are no longer buying for short term. If you're an investor like me, if you find a deal and you want to park your money because real estate is a great money park for inflation, do it. We can help you. Okay, we can show you some properties that haven't hit the market and get you in. If you're a beginning investor, you really got to think hard of what you want to do. Contact me. We can go over some math and some numbers to see what you want to do because our money's not worth anything right now, especially with inflation. So we got to park it somewhere. Silver, gold, real estate, stock market, stock market, stock market. Have you seen the stock market? Bitcoin, hard assets, hard assets, folks, hard assets. Real estate, silver, gold, not the gold and silver stocks, hard assets. I've learned the hard way. I've hired some great mentors, and I just want to give back to my community like you. So anyways, folks, I hope you enjoyed today's video. Hit that subscribe button and that bell to get notified when we drop the latest video. And I hope that I'm able to help you if you're thinking about buying, selling, or investing in some real estate, or relocating, or moving to Phoenix, Arizona. And we'll see you on the next real estate video. Hope you enjoy the energy, because I don't like to be boring. Okay, you can go. See you later.
If you have any questions, email me at victor@freeagentproperties.com. Again, that email address is victor@freeagentproperties.com, where we release new videos each week on home buyer tips, home seller tips, the Phoenix housing market updates, so you can be mindful when you're thinking about buying, selling, or investing in real estate. We will talk to you soon.